Hello, this is Ahura with another daily outlook video with you. We are going to see what happened yesterday in the stock market, totally in the financial market, what is going on right now, and what we have to expect from today's markets in the currency, forex market, stock, and others. Yesterday was an amazing day. How I mentioned yesterday morning in yesterday's market update that focus will be on the inflation data. Yesterday published data from the U.S. Consumer Price Index or consumer inflation confirmed the inflation numbers that we had in earlier yesterday before on producer price index. We saw that the producer price index is increasing. We saw that the producer price index was increasing in the last months, and it was happening like since 2 months ago. We saw the increasing inflation in the producer price was so badly. I mean, so badly it was increasing, and from since 2 months ago, we already was talking about that we have to take care about this. So this happened yesterday, and we can see that the reaction, the reflection of that, we saw that its reflection on yesterday's consumer price index numbers. We had at the what it was very important yesterday because just at the same day, just yesterday, earlier morning in Asian season, also we had the Chinese inflation numbers, both for producers and consumers, and both of them they confirmed that inflation in China also increasing. Yesterday, inflation shows that we are at the highest level since 1990. Yeah, in the past almost 31 years, we are in the highest level of inflation in past 31 years. So what does it mean? It means that the stock market, it is that the Federal Reserve should go to increase the rates in much earlier than before, much faster than earlier expectations. Before, we were not expecting any rate hike to see on January 2022. It was like a joke. If it was talking, we wanted to talk about that like a month ago. But now the possibility of increasing the rate, which is I don't think it's going to happen, but the possibility of increasing the rate in January 2022 increased to almost 25% from 0%. But increasing the rates in the first half of the next year, it is what we were expecting. It is what I was talking about, like weeks and weeks. I'm telling that the market should care about that. That was the reason that I was waiting for US dollar index to see that in higher levels. Yesterday we saw that to come almost on a 95, and earlier morning it touched 94, 98, almost a 95. That with the current ongoing or high inflation, this is what we're expecting. Yesterday, 10 years, the 10 years bond yields fell down to 1.84%. 1.84% for 30 years bonds, 30 years bond yields. This is incredibly showing that the market is in a high risk. We saw that the market risk was at 15, just like a few days ago, just on November 4th. And today, at the November 11, we can see that almost in a 90, just like from 50 to 90, just like 4 points. The VIX is increasing. This shows that the market is shifting its focus from the inflation data. At the same time, yesterday we had labor market data as well. 267 new jobs have been created in the last month. Let me check the number again. 200. Come on, November. 207 jobs claim 267. Yeah, I was right. 267,000 267 new or initial claims for receiving the unemployment benefits. It's the lowest level since in past 20 months. So this is all these numbers just telling us that the economy is recovered. Economy is in a very good shape, and we can count on a forward. We can count on that to go forward. This is what we are expecting from the U.S. economy. So what it means that while employment market or job labor market is recovering fine, while we can see that inflation also is increasing incredibly, it means that we have to wait for faster, for more tapering. I mean, like, see, to finish ended faster than earlier than mid of 2022. $15 billion tapering most probably in next meeting will change to something higher like 30 or 35 to end it in the first quarter of 2022. So this is the market expectation. This is the analyst and economist expectation right now. If it happened, we have to see the US dollar index above 95 for a while, something like maybe between 95 and 98 for a while. And this is what happened. Usually this happens in Democrats government, and now we have this economic situation and Democrats government together. So you have to count on a higher US dollar use the index rate. So this is, don't worry about that. This is not something surprise actually to Democrats government. I'm not talking if it's good or bad. I'm just talking this is what usually we see that. So this on the energy market. On the other hand, yesterday Mr. Biden talked about decreasing the cost of the energy cost. You know that in Glasgow in the last week it was going on this international seminar about changing the like weather changing and green energy and stuff like that. It was going on, and so they decided to decrease the use of the fuel, decrease the use of the energy that you're creating in dioxide carbonates. It's what's exactly the name of its name in English. So this gas, which is so bad for us, just in a very simple language, is coming from the oil. So it means that we have to decrease the oil production. We have to decrease the oil use. So we have to go after green energies and new and renewable energies. Yesterday is this comment from Mr. Biden in a line with the EIA weekly report. Yesterday we had API weekly reports that showed that more than 2 million barrels increasing in inventory levels of the last week for the for the week ended November 6th. Yesterday also we had EIA data, and it showed also more than 1 million 1 million increase, 1 million just like US inventory increased more than 1 million in the last week, which was more than expectations. So it means that just increasing the inventory levels with this comments from Mr. Biden caused the oil to fall yesterday. But if you go to 4 hours chart, you can see that still the EMA crossing strategies are still, if we but no. If you go to the just sorry, let me check the RSI. RSI has 43 and OBV trend line. OBV trend line also stick. OBV trend lines cannot confirm, but RSI can confirm that in a 4 hours chart. It sounds like we are in a downtrend. If we cannot just like oops, not this one. If we cannot pass this level, yeah, sounds like $81. Yeah, it sounds like somewhere around this level, $81.50. If we cannot stay above $81.50, then the oil will be in a downtrend, something like this. When above $81.50, we have to go for uptrend. But generally, with the current stock market, the oil probably for a short time, for a few days at least, will be under pressure. In the stock market, the more tapering, the tapering with the bigger number, in line with the expectation for increasing the rates in faster than before. It means that we have to wait for the lower levels in the stock market, and most probably this downtrend will continue. Same thing, it's in the Dow Jones. Same thing we can see in the Nasdaq. Same thing. This happened yesterday in all Russell 2000 and all the stock markets totally sudden too. The general market attitude for now is in the stock market is a downtrend, and we have to wait for lower levels. In the cryptocurrency market, yesterday's increasing inflations caused the people to go up and sharply falling in bond yields, caused the people to go after the cryptocurrencies and gold. You can see the gold at the 1000 yesterday it touched 1870 almost, and Bitcoin touched a new record high above 40, it was 60, almost 69K. It was like, we can see it almost as if, yeah, it's a 69,000, while the Ethereum also, it was in it's a new record high at 4,800 some. Same thing happened for the Ripple, not the all-time high, but it was increasing amazing. So the cryptocurrencies, especially I can say the Bitcoin, use took the advantage of that to get the attention for the people that you're looking for to go after the assets with no inflation, and to just hedge their portfolio. But it's not that huge, and probably it's not because the concerns about the inflation by itself in the cryptocurrencies market with the stable coins probably will scare people more than more than inflation that we have in other markets. So this is not something that can continue for long. But however, this inflation is scary. This inflation is scary. This inflation is really scary. I told you that several times in the last days. And with this, so the overall market, if we say that the US dollar index should still continue its uptrend, even if we see the correction, but still US dollar index still in uptrend. Oil for a while will be in a downtrend, a little bit, but not, it's not going to sharply fall, but it will be a slower downtrend for a few days till next week. Current stock market will be in a downtrend by end of the year. Overall trend is bearish for the end of the year. So this is what happened yesterday, based on what happened yesterday. Cryptocurrency. Let's go in the currency market. Euro USD again back in its downtrend. About the Euro USD, in last days we talked too much, and I explained you that while we are waiting for a downtrend. In economic calendar, earlier today we had. Let's go there. Earlier today we had already the employment data from Australia. It says that the Australian employment labor market is not as good as expected. We were waiting for 50,000 new jobs after losing 1,138, almost 140 jobs last month in September. For October, we were waiting to see 50,000 new jobs, creating 50,000 new jobs, while it's not they didn't even create a new job, they lost 40,000 jobs as well, which is so bad. And unemployment rate from 4.6% increased again to 5.2%, which is disappointing in Australian economy. So that's the reaction. If you go to AUD USD, most probably you can see that. Let's check the NZD USD. Where is the AUD USD? Let me find the AUD USD card. Let me bring the AUD USD here for you. If you go to the AUD USD chart, most probably we have to see this AUD card, AUD JPY. If I can find just the AUD USD. AUD USD. So this is this direction on AUD USD chart. You can see that AUD USD is in a downtrend, and most probably it's going to continue because we can see that we can see the pressure on Australian dollar, while the US dollar index also increasing sharply. So later today, the European Central Bank will publish its economic forecast, and it will be very important, especially for Europe, European stock and euro by itself. But before that, we have amazing day for pound for UK market, while GDP and manufacturing production data will be out today. in like almost 2.5 hours, almost in less than 3 hours. We have to follow the British GDP numbers, the British manufacturing and industrial numbers. It will be very important. We are waiting for a little bit slowdown in the economy. This in both manufacturing and industrial production also for September. GDP will be for the third quarter. For the GDP third quarter, sorry, for GDP third quarter, also we are waiting to see that a little bit slow down, a little bit slow down, a little bit slow down. It's gonna be like less than 6.8%, and they will put the more pressure on British pound as well as the British as well as the UK London stock market. GBP USD is in a clear downtrend because of mostly US dollar strength, and right now this downtrend is will be continued with this 2 days expected weaker data from the United Kingdom. And later in the US kind of US trading hours, we will have the OPEC monthly report. OPEC monthly report supposed to have the positive reaction in the oil market, so it will limit the oil falling, like oil market bearish. So the bears will be limited that because we are waiting to see that the OPEC monthly report will be a little bit positive for generally for the market attitude. This is what's going on, and we will have the auction also for 4 and 8 week bill. And yeah, this is what's going on today in the market. We don't have that much to watch. Just in European hours, GDP from Europe, GDP from United Kingdom, industrial and manufacturing production, and later ECB forecast also will be in the spotlight. Thank you so much, guys. Have a good day. If you have any question, please let me know in the comments your idea, what you're thinking, what's your expectations from these videos, what you want me to cover more. Please let me know in the comments under the video. Don't forget to like and subscribe the channel. See you guys. Bye.